I think the previous panel actually has laid a very good foundation for us from the perspective of founders, how fundraising is like, including a fundraising winter and some of the trends they have observed in the market. I'm very happy we have a very diverse panel here with Amy from Singapore and Paramjit from Malaysia, and then Rama from Indonesia. Before we officially start, I'd like to give them each a few minutes to have a brief introduction of themselves and what they do at their firms. Amy, do you want to go first?
Yeah, so I'm Amy from OpenspaceVentures. We are a Singapore headquartered venture capital fund that invests in from early to mid-stage tech companies in Southeast Asia. We also have a Web3 fund as well. So we were founded in 2014, and it's been almost 10 years, and now we run 5 funds with almost 750 million of assets under management. We have 5 offices in Southeast Asia with 40 people in total, and more than half are actually women. So we're doing very well in terms of diversity. And some of the key investments that we have made are, for example, Go2, Bioformus, Finexcel, Whisper, and Pluang in Indonesia as well.
Thank you very much. And then Paramjit, please.
Hi, my name is Param. So I represent a firm called MAVCAP. We are actually the venture capital arm of the Ministry of Finance of Malaysia. We are technically right now a fund of funds, but we started our history in 2001 doing direct investments in the technology space in the Malaysian ecosystem. So our mandate is actually to build the local ecosystem, but not just looking within Malaysia alone. We actually invest in funds that focus across the region. So what we do is that we are generally LPs or co-GPs or co-managers in funds at times, depending on the situation. And we work with GPs to actually set up offices in Malaysia. And also for Malaysia, then invest outbound. So our current AUM is around 2.2 billion ringgit. We're about $500 million US. And we get allocations every year from the government to continue to invest in the ecosystem, building the Malaysian ecosystem moving forward. Yeah.
And Rama, over to you.
I am Rama from DSX Ventures, probably the newest player in the investment block. So we're an Indonesia-only investment company that focuses on early stage B2B as well as health tech companies. We started back in December 2022, so we're super new. But I've been angel investing personally since 2015, and I'm also running a company called Daily Social, which is an ecosystem builder in Indonesia since 2008, and we're now 15 years old company. So we've been there from day one basically, and we're very excited to invest instead of just helping entrepreneurs. We can also helping them with capital.
Thank you very much. As you guys can see, we actually have a very diverse group of panels, and I'm very interested to know some of the big picture questions, including investing in Southeast Asia, some of the keywords I heard from the previous panel, impact investing, more focus on cash flow, and a road to sustainability. From your perspective, so Amy, from looking out from Singapore investing in Southeast Asia, what are the key trends you see across the region?
I think I wouldn't go specifically into subsector yet, but on a broader level, there are 3 things that we are looking out for 2023 and also 2024. Number 1 is Southeast Asia going global. I think it's about time that some Southeast Asian companies venture out of the region. I think healthcare is a pretty big one. So one of our investments started in Singapore, and now they are dual headquartered in Boston and in Singapore. Number 2 is consolidation. So I don't think this is Southeast Asia specific, but I think given what happened in the past few years and now the macro climate, there's gotta be a few big players trying to consolidate and acquire smaller ones, which is our M&A topic here. So I think there's going to be opportunity, but there's also going to be risks and pitfalls. So if you happen to be in one of those smaller ones, either you get cleaned out or you run out of business, right? So I do think consolidation is going to happen. So for certain sectors, you might want to wait a little bit more before going into it. Number 3 is actually green economy. I do think Southeast Asia, most of the governments have been pushing quite hard on climate sustainability. And I think naturally, when it comes to the economy, a lot is agriculture. So there's a lot of that in Thailand, in Indonesia, in Philippines as well. So we do think there's a lot of opportunity within smart city, green economy, and to help, farmers and also help, sustainability and climate.
Thank you. And Paramjit, from the LP perspective, what are the major trends you're seeing?
I think a lot of GPs, when you talk to them, they've been saying that fundraising has been challenging. It is true. I think a lot of LPs are also taking a longer time to make decisions, and rightfully so. But that has not stopped a lot of the marquee names in Southeast Asia continue to raise. Sequoia raised 850 million last year. You got people like Insignia raised over 500 million. You got people like East raised, also a large amount, right? And then Vertex is also closing their current Southeast Asia and India fund above their target. So while you're saying that as LPs, for me, it's challenging, but we're also seeing that there's flight to quality even in selection. Besides just selection of deals, there's also selection of GPs. So even for people like me, we are taking a bit longer time to make decisions, but we are continuing to deploy. But it's a lot more selective. We are being more discerning in making our decision.
That's very interesting. I heard the keyword of selection. And I think Indonesia, Rama, is a very special market. It's the largest consumer market across Southeast Asia. Looking at Indonesia, from whether it is investment or fundraising, what do you think are the key trends over the past few years?
Yeah, I think that word sums it up pretty well, selection. And one of the key things that I think, again, not Indonesia specific, is the switch to an investor market. Back then, startups can ask for crazy valuations, and because the FOMO investors are like, you know what, here's the money, right? So now that changes a little bit, quite significantly. Now, the VCs are taking their time in terms of investing companies, and now they have choices. Like, you have hundreds of companies, all of them at decent valuation, but the capital ended up, in the companies that are actually having more stronger financial fundamentals, for example, great unit economics. Like, those are the companies who are getting the capital these days. And I think it's challenging for later stage startups in Indonesia specifically because, if you raise money, a significant amount of money in 2021, which I think everyone did, they're having difficulties to raise right now. If they weren't, it's either flat round, which is the best case scenario, I think, or worst case, probably they fail to raise money. But, ideally, maybe down rounds.
Yeah, I think, Rama, you pointed out a very important topic here is whether startups who raised a lot of money before COVID, before the slowdown, can actually sustain their valuation. And I'm looking at the data right now just to give an overview of the market condition. So according to data from DealStreetAsia, Southeast Asia's privately held companies raised just a little over $2 billion in the first quarter of this year, recording the lowest deal value in 2 years. Indonesia recorded a significant decline as total funding dropped by 41% from the previous quarter and 55% on a year-on-year basis. I wonder, so Amy, from your perspective at early stage, you guys do growth stage as well right now. When you look at your investments in existing companies or your existing portfolios going into the market to raise a new round, if they have to, when the situation comes to raise a down round or even flat round, how do you approach a condition like that?
I do think we fortunately don't have that many of those situations because we're always very fundamental focused. Even in 2021, we were not super aggressive just because everybody else was. So, but cash is king, especially when time is difficult. We're kind of advising our companies to have at least 24-month of runway, right? Whenever you can. If they do have to raise additional cash, there's structures that you can use. You can use a convertible note. You can do a existing investor top up, right? If the fundamentals are strong, they just are in need of cash, there's a structures you can use just to make sure they have enough runway, but not too dilutive of the company's value. But if the valuation was super high previously and growth has slowed down and they are unable to perform, then it is what it is. But when you do raise such rounds, prioritize investors that will actually add value. So I do think that's how we would approach it.
That's very interesting. And Paramjit, I think from an LP perspective, people talk so much about denominator effect. And does that put you in a more advantageous position negotiating terms with new GPs in this market condition?
We have had pretty privilege in getting slightly better terms in this current market condition. I think there's been quite a bit of compromise that many people are willing to make. But for me, it works in my favor because we have a very clear development agenda for Malaysia. So that's typically what our asks are. And I think that also what a lot of VCs that we speak to, that actually we are deploying capital to, don't mind doing that because they have actually seen a lot of Malaysian startups actually hold their value pretty reasonably well, because they don't really raise a lot of capital during the boom time in the first place, right? And Malaysia has always been under the radar as compared to the other markets, compared to Singapore, compared to Indonesia, that saw a huge spike, 2019, 2020, even the early times of 2021. And then towards the second half of 2021, you started seeing that everyone started becoming a bit more real in their approach. And then there was a term being coined around like winter. And I think that has continued a bit towards 2022. But from what I have observed, because we are also seeing some of our funds which have quite a bit of dry powder deploying, towards the end of 2022, we are starting to see a lot more deployment coming in, where we have started to see across the region, not just in Malaysia, but also in the deals that some of our funds have done in Indonesia, even in Thailand, even some of them in Vietnam. Valuations have come back to be more sane. Okay. Yeah, but not necessarily a down round though.
It seems like from your perspective, you're having a more positive attitude towards the following few months.
I mean, essentially, coming out of any form of crisis or any situation that is an outlier, there's usually a big opportunity to deploy. In fact, if you look at history, be your best guide. Coming out of a problem time like what we have faced during coming out of COVID, usually is the best vintage to invest.
So shall we say 2022 probably is the best vintage?
22, 23, I think it's a good time.
Perfect. We're looking forward to more deployments from your side. And Rama, coming to Indonesia, do you see the valuation reset situation getting better?
I think so. I wouldn't say it's reset. It's more like normalized. Like it shouldn't have been that crazy high even before. And I agree with what Param said, which is why we kind of timed the launch of our fund late 2022. I think when we started in mid 2022, we see that a lot of, these are still amazing companies. Like they're having difficulties because, let's be real. A lot of these companies raise a lot of money. The investors ask them, let's burn that money. It's okay. It's for growth. Let's grow. We'll think about financial fundamentals later on, right? We'll think of how we make money later on. And that doesn't mean that the company is not good. That doesn't mean that the product is not solving a problem. It still is a good company, still is a good product. They just need to switch or pivot the kind of mindset in capital efficiency. And I think that changes the way they fundraise back in 2022 until today. And this is where the valuation comes down, more rationalized. The capital efficiency plays a very important part into their ability to retain their capital, converting that capital into earnings, right? So I think that's what a business should be. It's for the past 10 years, a lot of people has been making lots of money from power law. Now I think it's always good to have a little bit of check and balance, and this is the perfect time, like Param said, because we have so many, like the dry powder is crazy high. Like there's almost $300 billion of capital overhang globally, and that money has to go somewhere. It will likely be liquid maybe next year or maybe 2 years from now. And by then, all the startups that started 2022, 2023, they'd be ready, stronger financial fundamentals, becoming like a legit business, making tons of money. And then they actually have the options whether or not they want to focus on growth. They can always be profitable, but they choose growth. That's fine, because that wasn't the case previously. They cannot even make money even if they want to.
It sounds like it puts you in a quite challenging position in the next few years. We're looking at a lot more capital rushing into the market. And another thing I want to point out is a more global situation. We're looking at a series of bank crises in the US and other Western countries, and people are wondering if there's any adverse impacts on this part of the world. What do you think, Amy?
I think it's not just the banking crisis, right? It's just the global macro situation. Basically, Fed's raising interest rate too high, too quickly. And that's what broke the bank. I mean, they didn't do anything wrong. They just had mismatch of liabilities and assets, right? So everybody's feeling the pain, but I think mostly operationally, some people banked with SVB. But, if you take a higher level view, it does mean technology multiples are contracting, right? So you used to trade at crazy multiples in 2021, 2022, and now it's contracting. So if you go out and raise another round, that means people are going to look at your data and give you a lower valuation, right? And then that also means because interest rates are high, your cost of capital is much higher. So investors are less likely to throw money around, especially growth stage investors. So if you're going to raise subsequent round, people are going to look very carefully at your information and say, hey, are you worth my dollar, right? So I do think this is a global phenomenon, not just Southeast Asia, but obviously it did happen here as well, just because how crazy things were in 2021. So I do think it's something that everybody has to pull through, the listed market, crypto market, Southeast Asia market, US market, look at China market. So I do think Southeast Asia is not immune, but hopefully there's more tailwind to kind of facilitate because structurally it's still very attractive.
Agree. I believe we're seeing a lot of uncertainties in the market, not just the banking crisis. I think follow-up question for Rama on the similar point. When you do portfolio management these days, what are you telling your founders and entrepreneurs what to focus on and what not to, what kind of risk to try to avoid?
I think it's more focusing about converting, the capital into powerful earning, as well as the cost structure, maintaining the cost structure. The business should be scalable, but not the cost. So I think that's partly one of the key things that, again, we're only investing in super early stage companies. So from day one, we always tell them the money that you raise in this round, make sure you can survive it, or at least make money as soon as possible, right? Once you have that positive contribution margin, good unit economics, you can always raise money because that money is available. It just doesn't go to companies who are not making money. So I think it's very important that the capital winter, it doesn't mean that no one is getting funded. The money is still there. It just goes to a highly selective group of startups that can actually have capital efficiency.
While we have this more concentration on high-quality deals, high-quality GPs, we're also seeing a lot of participation from outside of Southeast Asia, including from China. I think a major topic last year was we see a flight of capital from Greater China, Hong Kong, to Southeast Asian new emerging economies, including Singapore, whether to set up houses for deal making or for fundraising. I wonder how is that influencing the local landscape? I believe, Paramjit, during our pre-panel discussion, you had a lot to say regarding global PEs, growth stage capitals going into Southeast Asia. What's your observation?
I think on the growth side of things, there is a shortage of growth stage funds in the early stage space in Southeast Asia. I think that's a fact. I think a lot of governments have taken action, including Malaysia, to actually back a lot of early stage guys, right? But on the B plus C and onwards, though there's shortage, I think a lot of people are now raising money on that front because they're seeing their portfolio companies mature and they need to continue supporting them on a follow-on round. Same thing like OpenSpace as well, just raised a growth stage fund as well. But at the same time, you're also seeing your global private equity boys. You're seeing, so for Malaysia, the very large pension funds, your EPF, your provident funds, are also going to start playing this space in a more serious manner. In fact, they're doing a managed fund, a private managed fund with some of the GPs that we have backed to purely focus in this space. So while there's a gap, I think there's a lot of concerted efforts that are being made in the region to actually fill this gap. So over time, I think as the industry matures, things will become better. I think people also fail to see that the Southeast Asia ecosystem is actually quite new. It's actually pretty nascent. Probably started in an active sense, probably in the past 10, 12 years in a serious manner. In the US, things started in the 60s. Right?
I think at the same time, I totally agree with you on that front, looking at the whole volume of startup fundraising across the whole region. $2.2 billion can be done in one single deal in China, for example. Yeah. But in Southeast Asia, we also see like super big players like Grab, GoTo Group go in IPO. From your perspective, do you think we are going to see more growth stage opportunities happening in Southeast Asia, and which sectors?
I think consumer will still remain the biggest. I think I think there's so many conversations happening even yesterday. I think when Kishore showed some slides and shared some numbers, the conversation, it is a consumption-driven economy. So we will see quite a fair bit of interest in that side. And why consumption? Simple, the growing middle class. As there is a growing middle class, same thing as you saw in China, local consumption overtakes everything, right? And you start being a lot more self-sustainable. So everyone starts building things around feeding your own population first. In fact, a lot of Indonesian startups have done really well, just supporting and just doing well in Indonesia and building businesses, just supporting that. Even Vietnam, you're seeing that, right? Markets that, like Malaysia, has to technically go out. Singapore, you actually have to go out a lot earlier, right? Because it is a global marketplace. So I think depends on the markets and depends on the stage of growth of each startup, then you have to plan differently because each of these markets, though it's within Southeast Asia, is different value pools. That's how I look at it.
I want to circle back a little bit on what you mentioned, accurate shortage of funding gap around the growth stage. So I have some data here just to provide context to our audience. Southeast Asia is known for a shortage of capital at Series C and D stage. So we're talking about check size around 20 to 100 million US dollars per deal. A study by Asia Partners shows that there remained a Series C/D funding gap of about 900 million US dollars for Southeast Asia to catch up with China last year versus 1.1 billion US dollars in 2021 and 1.2 billion US dollars in 2019. So we're seeing the gap closing a little bit. The condition is improving. I think, Amy, I know you guys, OpenSpace, launched your first growth stage fund. It's a 200 million US dollar OSV plus in 2021. What was the consideration behind going into the growth strategy?
Yeah, so our growth fund is a little bit different. So a lot of that is actually continue to follow on of our existing early stage companies, right? Because we have a pretty good successful early stage fund. And when they get to the mid stage, because of that gap, they have to go and look out for new investors, although they still love us, but we don't have any more money for them. So, and it's still doing well, right? Go to an example, we stopped at Series C because we really didn't have any money to double down on this deal anymore. And a couple of others that later on exited. So a portion of that 200 million will be to follow on our existing winners. And especially during this market condition, if company's doing well, capital is not abundant, and you want to preserve through the winter, it's better for us to continue to double down on the winner and make sure they continue to do well rather than forcing them to go out and raise another round. And then another portion of the fund will be doing external growth stage companies. And why are we doing that is because I think a lot of companies, they tend to not do super well at early stage. So we look at them, we pass on them, but then they somehow figure out a pivot and they actually do quite well at mid stage. So for us, we don't really want to miss out on that opportunity because we still have great relationship with them. And also there's not that much competition, right, at mid-stage for an on-ground VC. There's a lot of people who fly in, fly out, but on-ground VC who actually provides continued value add. So I do think it plays very well for us. For our portfolio companies, a lot of investors also prefer the risk reward at mid-stage because you're closer to exit. Your risk is a little lower. So it plays well for investors as well. So I think that's our unique situation.
Understood. So you mentioned both re-up in your existing portfolio and looking for growth stage opportunities, new ones. Do you have like a rough portion in terms of how much each portion is taken, or is deal by deal basis?
It's probably 60-40, so 60 in existing and 40 in external situation.
And we learned in the market the company also planning a second growth fund. Is there anything you can share with us?
So yeah, it's launched a couple months ago, actually earlier this year, and probably looking for first close in third quarter.
Okay, so what we heard is it's going to be a 350 million US dollars. That's the hard cap. Do you have a rough idea like how much you're closing for the first close?
We don't know yet because we literally just launched like 2 months ago.
Okay, I hope everything goes well with your fundraising process. And then Rama goes to you, because we're seeing more participation from global PEs and of course Chinese fund managers to help fill in the gap. As an early stage investor, do you see more opportunities or collaborations with players from outside of Indonesia to exit from your deals?
Absolutely. In terms of capital requirement, I think it's a win-win for both. But I think what's interesting is I see that there's more, specifically with foreign or regional players. I think they are looking for something more synergistic compared to just like, here's my capital, and please invest it wisely. They want some sort of like you said, as MAVCAP, we want something back to Malaysia. Right, we have an ecosystem synergy between, for example, Malaysia and Indonesia. The Chinese, at least the Chinese people that I've been meeting for the past 2 months or so, that have been flying around to Jakarta, they want that kind of synergy as well. India is also the same. Japan, the Japanese players also the same. We're more than happy to chip in capital, but let's do something more deeper rather than just they need more than just returns, which is interesting, and it can be challenging for a lot of new GPs or even startups in that sense, because like Param said, Indonesia alone it's quite challenging. It's highly fragmented. It's almost half of Southeast Asia itself, right? So it is still a very big opportunity just to focus on the domestic market. But I think it's going to be very interesting to see in the next couple of years as we explore this synergy with other Southeast Asian or even Asian countries.
Okay, I think focusing on Indonesian market is a very strong play, the high threshold of the market as well. I wonder from the LP perspective, Paramjit, how do you position your company investing in the developing part of Southeast Asia and more developed markets?
We always look at quid pro quo arrangements. So I mean, at the end of the day, I mean, MAVCAP is very open with what our agenda is. Our agenda is that, yes, we support things outbound, but there needs to be Malaysia in the positioning of whatever you're doing. I think that's not impossible, given that I think whatever way you churn your numbers for Southeast Asia, we will be number 3 or number 4 in most of people's roadmaps, right? By virtue of being having a large middle-class population. I think while Indonesia has an average age of 29 years old, Malaysia isn't far. We're about 30, 31 years old, so we're relatively young. You have a much larger affluent population, not as large as Singapore, but getting there slowly. There's a lot of certain industries Malaysia does extremely well, especially in the E&E and semiconductor space, right? Or on the higher end of the ecosystem. So naturally, whenever we go out and speak to investors, other investors that sometimes they even interview me before investing in funds and asking me what do I think about a certain GP and all. So I mean, the feedback is that this is something that's why we put in. and what we expect back in return. But the decisions have to be largely commercial nonetheless. At the end of the day, while development is important, it has to be balanced with returns. So that's how we typically look at it.
That makes a lot of sense. Since we are running out of time, one final question, just a quick sum up of the major opportunities you see in Southeast Asia market for the rest of the year, including which geographies and the top 3 sectors. And in Rama's case, you can just name the top 3 industries. Do you want to go first, Amy?
Geographies?
Geographies and industries.
Yeah, so I think generally just because market size, we are probably 30% Singapore, 30% Indonesia, and the rest is split between Thailand, Philippines, Vietnam. So still probably looking at that kind of split. In terms of sectors, green economy, I think, is actually catching a lot of investors' attention. And we did do like a circular economy recycle, basically, in Indonesia. And also healthcare. So I think OpenSpace is one of the actually mostly heavily weighted healthcare investor in early stage venture. So we still believe that there's a lot of opportunities within healthcare in Southeast Asia, but you're gonna have to like be very careful of what sectors to play in and what government relationships and approval we need to get. And third is I do think there's still a lot of advancement in SaaS. I think Southeast Asia traditionally has not been, it's a lot of SME-driven economy. So, I mean, adoption of SaaS is a little bit of slow because willingness to pay comes a little slowly, but there's gotta be an uptrend of automation and using SaaS because in certain parts of Southeast Asia, labor may get more expensive. So I think that's in areas that we're looking as well.
And Paramjit.
I have to say Malaysia, right? But I do see, I mean, when we talk around, we do see quite a bit of opportunities coming on the Philippines. Thailand is certainly interesting, but Thailand is also a difficult market to get in because it's also controlled by the large corporates, right? And of course, Indonesia, given there's close relationships between the governments and there's acute interest to work together, right? And the industries that I think that is interesting for us, consumer. Another one more that we can't ignore is in the space of deep tech, specifically in the semicon space, because there is a deep push of Industry 4.0 related developments that the government is pushing to support the local industries. And one more important thing for Malaysia today is actually in the agri space because of concerns of food security, which I think is being touted around by most governments across ASEAN. So these are things that's important to us.
You probably should visit the exhibition space. We have some agtech startups from China looking to expand overseas. Thank you.
Yep.
And then Rama?
Yeah, number one, I think healthcare, I think it's going to be one of the largest growing market in the next couple of years, specifically consumer health tech. So right now we have a company called Halodoc, which is the number one, and then yeah, exactly, amazing company. But the second runner-up is like it's a far gap between the first and second fastest consumer health tech company. So there's definitely a lot of opportunities there, especially with the government, the Ministry of Health, very progressively launch this new regulation as well as like a sandbox for health tech companies to engage with patient medical records. So they're kind of centralizing all this digitalization in the health tech industry, which is amazing. Agriculture also, again, I think one of the main focus from the government and has been giving out a lot of incentives for companies in this particular sector. Indonesia has been an agriculture company from its very beginning, hundreds and hundreds of years ago. And the government is really wants Indonesia to have that kind of food sovereignty in a way, as well as power to control our own food supply. So I think this is going to be one of the next biggest investment opportunity in the next decade, I think.
Thank you very much for sharing. Since the time is already up, I hope you guys enjoyed the session today, and there are some insights you can go back, can help guide your decision making in the future. Thank you so much. A round of applause to our distinguished guest today.